So you say if we get another robust jobs report out this week, it may negate the need for further fiscal stimulus. As we spoke about with Nancy Pelosi in that interview, you're seeing this at a time where case numbers, second and third waves of the virus are taking over in parts of the US. New York numbers are back to the highest seen since May. Regardless of the numbers, isn't there an argument that further fiscal stimulus will be needed?
The additional fiscal stimulus will be needed, but for the right group of the economy. We've talked a lot, economists, and I'm sure your team as well, about the K-shaped recovery. And I think some of the politicians are looking at that top half of the K and saying, well, the housing market's great and the stock market's great, so where's the urgency? The economy hasn't fallen off a cliff. But if you're on that bottom half of the K, you're facing a completely different economic reality. And that urgency is that you needed the money yesterday. You need to pay for groceries and you need to pay for your rent this month.
And that urgency, of course, leads to the consumer sentiment aspect of the equation as well, right? Let's take a look at this chart, which takes a look at the confidence in job seeking. So the spread of Americans seeing plentiful jobs over hard to get ones is just nearing to the highs that we last saw back in 2001. So how crucial is that further stimulus to the consumer-driven recovery, which we know is going to be key for the US as well as a number of other economies seeing that rebound?
Exactly. And as you look at the jobs, so we saw right away that the first jobs that were lost were those service sector jobs. And they were the ones that helped lead the recovery when we were looking at that huge jobs report in June and also in July. So now what we're actually seeing is that the high income jobs, instead of adding right now, either the companies are staying flat or they're shedding jobs. So if you had one of those roles and now you've lost your job, you then are looking at what is available. And I've spent some time looking at who's hiring a lot. The answer right now, Walmart, Dollar General, Instacart. So these are great jobs as an income buffer. But if you lost this high income job that maybe you had a bachelor's degree, a master's degree from, it's hard for you to find another job that you are decently or overly qualified for.
So which stimulus package right now put forth by both the Republicans and the Democrats makes more sense in order to support the economic recovery?
So I've been against the idea from the Democrats that it needs to be a huge dollar amount, because we were very swift and very aggressive to do $3 trillion. And right now, I think that the Republicans are right that we need to keep this dollar amount in check. We need to think about the future. We need to think about the deficit. But I also think that the Democrats are right that we need to make sure that it is the school teachers, it's the firefighters, it's our workers that have been there the entire time facing COVID when the rest of us were lucky enough to work at home. They need to make sure that they're getting the right amount of funding.
The Economist consensus right now is that the September's payrolls numbers will come in around 875,000 jobs added. What is that number going to tell you about the path of the economic recovery right now?
So we've been communicating to our clients for a while that the easy gains in the recovery are behind us. Think back to how I said June and July. We don't expect to see another blockbuster report like that. What we've communicated is that 1 million jobs. We want to see, I know consensus is around 800. We want to see around 1 million jobs added to tell us that that recovery is still on the right path. Because if we start to see the economy backsliding, or if I don't believe we will, we see this number go negative, that's telling you that the economy and the way consumers are reacting to it is very, very different than if we had 1 or 1.5 million jobs. So we're looking for that. It's keeping to the trend that the economy is growing, but it's not a V-shaped recovery. We went down for 2 months. We're now here 5-6 months later, and we're starting to slow down the rate of growth. And that's to be expected.
Ali, how much weight are you putting behind the volatility that we're getting going into the election, the potential of a contested result? We know the president is already laying the groundwork for it to be very bitterly contested if there's any kind of margin for a close call there.
That volatility is not only going to play into the stock market, but it's going to play into consumers. As consumers are looking around and they're saying, do I want to do a big expense right now? Do I want to have a little bit more stability? I think their choice is going to be, let's just pause. Because we saw in the data that personal income, once you take that stimulus away, is actually down on a year-over-year basis. And so if consumers are a little bit uncertain about whether or not they're going to get additional funding, then we're going to just see them say, hey, let's just wait to see what happens once the election hits.